Hey everyone, every investor asks which stock should I buy, but nobody asks why is this stock even moving. And honestly, that one question can completely change how you invest. Today, I am going to show you the exact framework that professional investors use every single day. It's called factor investing. And once you understand this, you will never look at the stock the same way again. Think of it like picking a cricket team. You don't pick a player just because of his name, right? You look at his stats, his form, his track record. Same thing in investing. We don't just look at the company name, we look at the factors that are actually driving the stock price. So let's break down each factor one by one. First factor, momentum. What does it mean? Simple. A stock that is already running fast will keep running fast. Think about a batsman who has scored big in last 4 matches. You expect him to do well in the next one too, right? Same logic here. If stock has been beating the market consistently for 6 to 12 months, that's momentum. Winners keep winning. That's the idea. Second factor is value. This one is a pure common sense. Imagine you walk into a shop and product worth 10 rupees is selling at 8. You grab it immediately, right? That's exactly what value investing is. We find great companies whose stock price is much lower than what the business is actually worth. Basically, you buy a 100 rupees business for 70. Third factor, growth. These are the rocket ship companies. Sales going up, profits going up, market share expanding every quarter. Now, these companies look like a little expensive on the surface. But here's the thing. Their growth is so fast that the price you paid today feels cheap in the future. You are not paying for today, you are paying for what this company is going to become. Fourth factor, fundamentals. And this one is safety filter. See, a stock can show great momentum, great growth, but if company has too much debt or weak cash flow, it's a trap. Fundamental act like a filter. It removes all the bad stuff and only keep the quality companies. And the most important thing, it keeps you away from the operator driven stock. Those pump and dump traps that look great on the surface but are hollow inside. It's simple. Strong fundamentals is equal to strong foundation. Fifth factor, sector leaders. In every industry, whether it's IT, banking, FMCG or auto, there are always one or two companies that rule. They have the best technology, the strongest brand, the widest reach. And here's the best part. Even when market crashes, these leaders survive. Smaller companies fall apart, but kings hold strong. When you invest in leader, you sleep better at night. That's the safety net. Sixth factor, beta. Beta basically tells you how wild is the stock. High beta stocks are like roller coaster. Up 5% today, down 5% tomorrow. Your heart is always racing. Low beta stocks are calm and steady, slow but stable. Understanding beta tells you exactly how much risk you are taking compared to Nifty. You need to know this before you invest, not after. Now, the most important concept of all, market cycle. Here's the truth. No single factor works all the time. Sometimes momentum wins, sometimes value wins, sometimes growth takes the lead. The market keeps changing and your strategy needs to change with it. This is why we use a multi-factor approach. It's like having a cricket team with a mix of batsmen, bowlers and all-rounders, ready for any kind of match or any kind of pitch. One factor slows down, another picks it up. That's the power of this approach. So now, the big question. How do we actually use all of this? See, we just talk about momentum, value, growth, fundamentals, sector leaders and beta. All of these factors combined together are exactly how we built our model portfolio at BossInvestor. But we don't stop there. We also layer in a macro analysis on top of it. Things like interest rate, inflation trends, FII flow, sector rotation. The big picture stuff that tells us where the market is actually heading. So the model portfolio is not just factor based, it's factor plus macro. That combination is what makes it truly market ready. Every stock that enters the portfolio has passed through each filter. Momentum check, value check, growth check, fundamental verified, sector leadership confirmed and beta managed. Nothing random. Everything has a reason. Now you might ask, okay, this sounds great, but does it actually work? That's exactly why we build Backtester. Before any strategy goes into model portfolio, we run it through 10 years of a real market data. We check how did this factor combination perform in 2018 slowdown? Did it survive in 2020 COVID crash? How did it hold up in a 2022 consolidated market? Every bull phase, every bear phase, the strategy is stress tested through all of it. And the best part, you can do this yourself too. On the BossInvestor app, you can use Backtester to test your own factor-based ideas against years of historical data before putting a single rupee at risk. Because in investing, testing before trusting is always smarter move. So this is a full picture. Factor gives you the what, macros gives you the when, the model portfolio gives you the how, and the backtester gives you the proof. At the Boss Investor, we have connected all four together into one clean data-driven system. Explore our model portfolios, run your strategies on a backtester, see the science behind every single return. It's time to stop investing on a tips and start investing on a data. Download the Boss Investor app today. Subscribe for more video like this one. Happy investing everyone.